Hello, everyone. Did you all know that investing in real estate gives more money? So, let's understand in this video how to start investing in real estate with little money. First, we have to establish a clarity and remove the psychological blocks. Real estate is not just buying and selling, it's a long term income plus asset building. Common beliefs that block beginners. I need 10 lakhs plus to even begin. Only big cities give profit. I need a job in real estate. These all are the common beliefs that block the beginners. You have to remove all these blocks. The major benefits of real estate: control over your asset, cash flow monthly if rented. If you rent it out, you will get a cash flow monthly. Tax deductions on loan interest, depreciation, loan leverage that is equal to build asset from others' money. Breakdown of real estate types: residential, flats, independent homes, commercials, shops, co working spaces. Industrial includes the warehouses and the logistics, raw land, a future development potential. So, here the mindset shift is required. Think like an investor, not a buyer. So ask, how can this asset generate cash flow? Always build a second financial base. Build a strong financial base. Your foundation is your fuel. Start tracking every rupee: income, expenses, savings. Build a 3 month emergency fund. So investment is not emotional. Credit health. Access to leverage. Use credit cards smartly. Don't miss EMIs. Clear old dues strategically. Save and separate capital monthly. 3,000 to 5,000 SIP into liquid fund for future down payment. Start budgeting for future property. So, what are the tools to use? You can use Walnut, MoneyView, ET Money for budgeting, Sibyl, Experian to monitor credit score. Third one is low cost real estate entry strategies. Choose your entry lane based on capital, time, and skill. House hacking. Do you want to live or rent? Buy a home with an extra room or floor. Rent one room to reduce EMI. You can do this option also. Especially profitable in student or tech zones. Example, buy 2 BHK in Bangalore for 35 lakhs. EMI 18K. Rent one room for 10K. Net EMI is 8K. REITs start with rupees 500. Invest in real estates like a stock. Ideal for beginners, salaried people, quarterly dividends plus growth. Best Indian REITs: Embassy REIT, Mindspace, Brookfield India. Fractional ownership, commercial property access. Own 1 to 10% of high end offices, platforms, property share, HBITs. Transparent rental yields, 10K to 50K starting. Can exit after 3 to 5 years or via resale market. Real estate mutual funds, international exposure via Indian mutual funds. Examples: Kotak Global REIT Fund, PGM Global Select. And the next is the land syndicates or co-investment groups. Pool 1 lakh to 2 lakh with family or friends to buy a plot. Use legally registered partnership deed, resell after appreciation. Affordable housing schemes. State run housing boards offer flats from 6 lakhs to 15 lakhs. Apply early, these sell quickly. Minimal down payment required here with PMI. PMI is Pradhan Mantri Awas Yojana. The fourth one is creative financing options. Capital is not the problem, creativity is the key. Seller financing, owner financing. Seller becomes the lender, you pay them monthly. Used when buyers has bad credit, seller wants passive income. Draft via lawyer, registered legally. Partnerships, joint ventures. So find investor, operator types. Stamp duty waivers for women, home loan interest subsidy, loan against property. Use your parents' property to raise 5 lakhs to 10 lakhs. Still own the asset, get capital to invest. Micro loans, fintech platforms, Cred, Cashy, Navy. Offer small personal loans. Use wisely for down payment gap. Step by step action plan. A beginner's roadmap for from rupee 0 to first deal. The phase 1 is pre-investment, 0 to 3 months. Save your starter stack, 20k to 50k. Pick one model, whether REIT, fractional, or house hack. Study the process deeply. The phase 2 is research. The phase 2 is research. Month 4 to 6 months. Visit real estates. Compare REIT's returns versus flat rentals. Shortlist one city and one method. The phase 3 is execute first investment. Start REIT, SIP. REIT means Real Estate Investment Trust. The phase 3 is execute first investment. Start Real Estate Investment Trust, SIP, 1000 per month. Open account and property share. Book a site visit for house hacking. The phase 4 is monitor and reinvest. Track rental yield appreciation. Reinvest rental cash flow. Think, can I scale this 3x in 3 years? Real life case studies. Use proof to inspire trust and ambition. Rahul, who is a 25-year engineer, he invested in real estate investment trust 10,000, gained 1,200 in 12 months plus experience. Neha, 32 teacher, she's a 32-year-old, 45 lakhs, 2 BHK in Hyderabad, rents one room, cash flow 6,000 per month. Sanjay and Priya, siblings. So they pulled 1.2 lakhs, bought plot in Tier 3 city, sold for 3 lakhs in 2.5 years. MNC employee in Gurgaon started with property share 50,000 to 8,000 quarterly income. So the seventh one is risk management and legal awareness. Don't lose money trying to make money. Legal risks, fake title deeds, unclear ownership history, government acquired land resold, financial risks, borrowing beyond capacity, assuming rent will come instantly, emergency fund misused, risk prevention, hire a lawyer for property verification, use only RERA approved projects, don't trust unregistered agents. Tools, apps, and books. Learn faster or act smarter. So the tools used are Grow, Kuvera or Kuvera, Real Estate Investment Trust and Fund Investing, Magic Bricks, 99 Acres, Property Search. This is for property search. RealX, HBits for fractional ownership, Legal Desk, Vakil Search for document help, Economic Times Money, YNAB for budgeting. The book on rental property investing. You can go through the books. The book on rental property investing, written by Brandon Turner. The ABCs of Real Estate Investing, written by Kin McClory. Indian Real Estate Uncovered, written by Santosh Kumar. So the podcasts, you can listen to the Real Estate Guys, the Money Controlled Real Estate, Bigger Pockets India, Objection Handlings, convert skeptics into believers. What if I lose my job? Use passive options plus emergency buffer. Isn't land better than flats? Depends on time horizon and goal. Too risky for me? Start with real estate investment trust. Do I need to register anything? Yes, all agreements. Can I do this without my family knowing? Yes, if independent and legal. So the final motivation and call to action. Inspire, simplify, and this is what I would suggest. Your goal is not to buy real estate, it's to build wealth that lasts generations. Start with what you can, not 10 lakhs rupees, just 1,000 real estate investment trust or SIP. Action creates clarity. Next step, download checklist, comment your. So the 11th one is location strategy for beginners. Not all real estate markets are equal. Some explode with growth. Tier 2 and Tier 3 cities, lower entry cost plus high appreciation. Look for metro expansion zones, industrial parks, IT hubs nearby, colleges, hospitals, and 5 kilometer radius. Use Google Trends plus Magic Bricks data to study local demands. Stay within 2 to 3 hours from your base city. Need easy monitoring. Example, any of the nearest location which is having a IT hub kind of. So this is what the example I would suggest. Tier 2 and Tier 3 cities. Tax benefits and smart structuring. Real estate is a tax saver gold mine if done right. Section 24B deduct up to 2 lakhs on home loan interest. ATC deduct principal repayment up to 1.5 lakhs. HUF structure create Hindu undivided family account, separate PAN, second investment channel. Depreciation if renting commercially reduces taxable income. Use a CA to create efficient ownership structures. Individual versus joint versus company. How to spot a good deal? You don't make money when you sell, you make it when you buy. Look for motivated sellers, distress sales, relocation, below market value, hidden gold, price per square feet compared to nearby properties, rental potential, a rupees income versus purchase cost, future development, road plans, metro schools, etc. 1% rule, monthly rent greater than or equal to 1% of property value is equal to strong deal. Building your real estate network. Your network can bring you off market deals and investors. Build relationship with real estate agents, builders, property lawyers, loan consultants, rental managers. Join forums like Quicker, Facebook groups, Telegram channels, attend RERA registered expose reality workshops. Start your own WhatsApp broadcast group for property alerts. So the next is scaling up from first investment to portfolio. Real freedom begins when you repeat the game smartly. Use rental income to save for the next down payment. Refinance after 2 to 3 years and extract equity. Diversify. Property 1, residential rental. Property 2, fractional office. Property 3, plot on outskirts. Delegate work via property managers, legal retainers, loan agent partnership. Track everything using Notion or Excel. ROI, cash flow, EMIs, taxes, growth. So this is the end of the video. If you found value in the video, please give a thumbs up, subscribe to learn more, to watch more videos. And below in the description there is a link to join for my free webinar, Transform Your Finances. Register for my free webinar, and also please start growing your wealth today.